This
and the business
conference
planning.
will now be recorded.
Uh, Business planning for one, and secondly, it's essentially with a tactical focus that is there. So it provides a platform to the business execution team to come together, discuss the plans, present the plans, connect, coordinate, and how the organizational capabilities, the products or services, if services are there that they're offering, they can sell and service to the customers. So this is integrated business planning is a platform, is a process which integrates in a more structured way. So I would say it's kind of a next level of SNOP that is there. It has been around for some time, mostly around American companies. It's essentially a US based concept. The Oliver White is the guy who introduced this concept, and his objective and his idea was to how you can evolve, how you can develop the processes to achieve the A-class company performance, and essentially integrating the business operations, cross-functional business teams, providing them a structured platform. So from the definition part, I'll just quickly jump to the next slide. I mean, this is something all of us are familiar. I mean, we are working on in the organizations, and at the heart of any organization, I mean, you can call it, there can be a success story around strategy or execution or around people, but essentially, at the end of the day, there are these three components that you see on the screen: process, people, and the tools that business uses and the people use and the process use. These three components come together, and they help to organization and the teams to operate, to deliver on the results, and to keep on marching towards the vision and mission of the company and achieve the goals beyond the 12-month budget cycle. So these are very critical, very important processes, very basic processes also, which are at the heart of any organization. So processes can be whether an organization has a SNOP process, or they are using a simple planning process, or they are using an IBP process. So processes can be anything, and how these processes connect to the organization when they're operating and executing the results. And through these processes, how the people, the team, they are connecting together to drive the business performance, and what are the tools that are enabling processes and that are enabling people to drive the business performance. So when you a very nice balance in an ideal world would put them together and give you a systematic approach to run an organization, and each element is more or less equally important, I would say. um, so to run an organization, to achieve the results, to drive the business performance, all the three components are very critical for the organization, how you move towards achieving the results and achieving the objectives of the organization. So enabling, like I say, the header of the slide, enabling right decisions in all circumstances. So these three components come together, and they are very important enablers which complement each other to drive the business processes. So I'll explain a little bit more in more detail with a couple of practical examples in the following slides. Um, when we talk about the process that we want to set up, so I mean, we live in an exciting world, and it's a very dynamic world, a dynamic business environment. Every single day there are new products, new solutions available for the customers and for the businesses. So it's very important when you're making choices about the strategic objectives and the goals of your organization. Very important starting point is, where do we stand? It's very important to know that, and this analysis, this situation assessment has to be very uh, uh, transparent, and very, very clear. You have to be honest with yourself. So I have listed out 4 phases. Normally, I mean, at some stage in our careers, in our work life, all of us would be able to relate to these things, that okay, we have been through this journey. So I mean, when I look at these, I can tell you that I have been pretty much through all the phases. I have experienced all the phases where the phase one is coordination. So it's not necessary that it's a new organization that starts operating and it goes through this maturity phase, maturity cycle. It can also happen that you have changed people. I'm just connecting back to the previous slides. Your management has changed, or some other critical element, or your board has changed, or your major shareholder has changed, and everything kind of hits a restart button. So that's where you can probably, if an organization is at a certain maturity stage, it can hit back to a phase one stage where there are a lot of coordination issues. So probably what I can share with you, I experienced one time. We had a very downtime in the business. We were doing really bad. I mean, we were making good money. We were running plant capacities almost full, but then we started losing out on the top line, and we started losing out on some of the critical team members. And that's where it was a very painful phase, but a very enlightening phase also, where we were doing a lot of firefighting. So it took us almost like 6 months to bring all the teams together, to bring all the to review all the processes, and to bounce back on the business and the top line side. So we were able to recover some of the business losses, but it was something like we had gone to the top, and then we hit the phase one where we were doing a lot of firefighting. So you have to make an assessment, where does your business stand, and then you have business controls, business process controls, and the business process controls, it can evolve also over the period. I mean, you might very well have a process which was working fine for X number of years, and maybe one of your critical team member, he moves on, there is an organizational change, or your boss changes. So who had all the background and all the ideas about why we do certain things in certain way, what's the reason we do it in that way. So business process control can be it can also hit a restart button. Like one example I can think of, or probably I can relate to, is change in a very critical team member, or maybe you were using a very basic example, a basic Excel sheet, and then you suddenly want to automate that, and you bring in a new system, and the new system, it has acceptance challenge, or it has a, operational challenge, and then you hit a turbulence in the business, in the process is not working fine. So you have to make an assessment that okay, how mature, how well understood, how well documented are your processes. So you have to make an assessment, how good are your processes. Then when the business moves along the maturity cycle, along the maturity curve, to put it maybe in a better way, uh, we drive business decisions and the business direction based on our understanding of the business, and based on the knowledge and information about available about the market, about our business. So a lot of things, we have been talking a lot about the blockchain, we have been talking a lot about the AI, about the smart businesses. So how, and the big data, so how well we are able to leverage those knowledge in the people, in the organization, in our database, in our systems. So how we can automate those processes and systems. And then the last thing is that there are like different pockets. So is your organization working in silos? Your supply chain, your customer services, your production, or if you're in a service industry, you're probably consultants, your sales team, your finance team. So, or how well are they integrated? And now we have a great enabler, which is a technology which can extend the processes, which can help us to leverage the knowledge that we have within the organization, within the people, and we can have very nice visualizations and very nice, very clear and very transparent information flow across the organization. So all the organization, it becomes very easy to bring most of the people, all the people, leadership team on the same page. So when we are talking business, when we are talking execution, all of us, we understand each other and we are talking about same set of information. And for this phrase, my favorite phrase is single source of truth. So technology enables you to pull the data together, bring out a clear, transparent view for everyone. And since the data source is one source for the entire organization, it enables everybody to be on the same page. So I mean, these are the maturity assessment levels, and based on this maturity assessment, you plan your next move, the kind of processes and the kind of systems you want to roll out, and how you plan to execute your strategy for achieving the business objectives. So I'll move to the next phase, that it's kind of lists out few points where I think you'll be able to more clearly relate to how your business can transition and what stage your business is currently at. So I think probably annual budgeting process is one of the very common examples that all of us can relate to. We just before the financial year end, maybe a month or 2 months before the end of the financial year, we sit together, we discuss around the budget, targets for the next year. We make few nice presentations, make presentations to the board, and then it's boom, done. You know, the entire organization says, oh, we have a budget direction for the next 12 months. And then everybody starts focusing back on the tactical strategic execution of the business plan or annual operating plan. And that's where the organizations usually miss out on the bigger picture, because your focus or your horizon is always limited to maximum of 12 months. And as you move along the year, like 6 months have passed after your budget has been approved, your horizon again starts to narrow down. And then again, a month or 2 months before the end of the financial year, you start thinking about the next 12 months, because you have to make another presentation to the board. So you have to be very clear that how you want to, what are the hit points, what are the key points that you need to target when you transition into integrated business planning process. Because we in organizations, the people have tendency to focus on a very immediate future, the near future. So these are few of the points that you can relate to make an assessment that when your business is transitioning to a more structured approach and more structured uh, integrated business planning phase. And there are like broadly 5 points I've listed out. It relates to the business maturity stage also, and it helps you make a informed assessment. So that's where that should be kind of helpful for everyone. So I'll take a pause here if there are any questions or any comments.
Hello, yes, hi, Humayun, Dishan here.
Hi, Zishan.
Hi. I just want to, you showed one slide about people, process, and tools. I just want to know what's the role of culture in all this integrated planning. Like if you talk about your organization, like what role the culture plays in this.
Okay, organization culture. It's okay. Organization culture is it's a. I think it's a great question that you ask.
Mhm.
Organization culture is related to essentially the people, and it relates to the way we run the organization. So I mean, one very interesting phrase comes to my mind, which says like strategy. The culture eats strategy for the breakfast every day.
Yeah.
So culture is very, very important, and that's where the people's role come into the picture. You can have
Mhm.
the best processes in the organization, you can have the best tools in the organization, but
Exactly.
if your people don't accept that technology or those solutions or your strategy direction,
Mhm.
the culture will not let you succeed as an organization as a whole. So it's a very important soft aspect that needs to be addressed. And when I move to the 5-step IBP process, I think that will help you understand it better, that how IBP gives you kind of an integrated platform where you can address this part. And at the end of the day, I think one very important thing is that you have to draw a line somewhere. I mean, it cannot be a line in the sand. It needs to be very clear that, okay, if you are leading an organization, if you're leading a team, and somebody is not aligned to the strategy and the vision and the mission that you have for the organization, then I think this person or this part of the culture becomes counterproductive for the organization to proceed as a whole. And you have to probably do a kind of a surgery for that part, and you have to remove that part from the organization, the way you lead your teams around that. So I hope, I mean, I've been able to answer your question. I think
Yeah, I
able
think it's
to
clear.
understand it better when I explain you the 5-step process in the IBP's
Okay.
process. Okay.
Okay, sure, sure. Clear.
Sure. Okay, now we come to the how part, how it works. So traditionally, what happens is that traditionally we look at 12 months annual operating plan. We call it budget, we call it operating plan, and like I mentioned earlier in the session, that we tend to start the process a month or 2 months before the end of financial year for the next 12 months. So the teams come together, there are a lot of email exchanges, there are few meetings, then there are stretch target, oh, we have been doing like this, there are few analysis and a lot of debates and discussions. And finance team populates a number based on the inputs from the operations team, from the production teams, from the commercial teams. And that there is a little some back and forth on that, CEO then to the board, and meetings, and the direction and decision is there, where you have a plan for the next 12 months. So what is interesting and what is different about IBP is IBP talks about a rolling 24 months or rolling 36 months outlook. It talks about the next, it talks about the future, it doesn't talk about the history. History is probably, I don't know if I have to quantify, maybe it might be 5% that you can talk about your last month or last quarter results. But essentially, the integrated business planning talks about the forward looking focus of the organization. And that is the beauty of it, that that's where you can connect your strategies and you can see your strategies into action using this, leveraging this IBP process. IBP breaks down the integrated business planning process into 5 steps. We call it like 5-step process. It starts with the portfolio management. And just to give you a little bit more perspective, so everybody can relate to how it works, is that these 5-step process has 5 meetings. And you see in the next column, there is a process facilitator. So process facilitator is the person who facilitates those meetings. And the process owner is a different person. He's this process owner, he or she is a person from the leadership team who owns that process. And so these two guys work together to operate, to run these meetings, these processes. There are a lot of analysis, a lot of discussions happen, and all these 5 steps have to be completed within a month. So you can say that there are 5 meetings that happen in a month in the organization around this 5-step process, starting with the marketing meeting. So, and another beautiful part about this is that if you see all the cross-functional teams, traditionally in an organization, marketing, the demand planning or supply chain planning, the finance guys, and the executive team leadership, they operate in silos. What IBP does is it provides them a platform where all of the representatives, the process facilitator, and where possible, process owner attends all those meetings. So one view can be, okay, there are too many meetings in a month, but when you actually run the show, when you actually run this process, it really gels in very effectively. So when you have process facilitators sitting in all the 5 meetings, they are able to connect to each other and they're talking the same language. So it becomes a very beautiful cross-functional team. In the portfolio management, the marketing team lays out what is the direction, what are the focus products that we have for the organization, what are the product launch plans, what are the pricing strategies that we're going to follow, what are the process product life cycles that we're going to follow. I mean, what are the products we are going to phase out and what are the products we are going to phase in, and the new products or new services that we have launched, we track the progress of those products or services for the, say, I mean, for example, we track it for the next 12 months, that okay, is it uh, moving, is it giving us the result the way it was expected or the way it was planned. One more important point here it is that when we talk about 24 to 36 months outlook, we are not talking about essentially that, okay, what are the firm contracts that business already has, but it is the confidence level of the team that, okay, we can commercially we can sell so much, or we can do so much in terms of my top line, my revenues, this much revenues I can generate. And of course there is a detailed planning there. So there are like when we talk about 24 months or 36 months projections, so there are like few components to that. There will be a few short-term contracts you will have. Maybe I have a customer who has placed an order for me for the next 1 or 2 months. Then there might be some customers, kind of a tender-based business or RFP, that we have like 12 months or 2 years contract with some multinational organization to supply to them. Then there can be another type of contract that, okay, I have contracted business with some of my key multinational customers, but we have essentially locked the services, we have essentially locked the business volume, but we haven't locked in the prices. We have locked the pricing mechanism with them, but we haven't locked the prices essentially with them, depending on certain maybe forex variable or certain feedstock prices, depending what are the feedstock prices in the market at the time when the contracts are locked out. And then the last component is the projection or the forecast, as you may call it. So these things come together and you look at product and the customer level. So when now I'm moving on to the next cycle from the product management review, or PMR as we call it, to the demand review. So what demand review does is it has an input, it has a direction from the PMR, where marketing has laid out, PMR has laid out a product life cycle and the product launch and all those plans that they are working on, and the direction they have for the organization and for the commercial team. Based on that, the demand planner works with the commercial team and he puts all these sales contracts, sales orders, sales projections, sales forecasts together by customer, by product. He puts them together and he brings out a certain view. The guys, we are selling, we are servicing, for example, 3 product categories to 2 different types of customer categories. My one customer portfolio is maybe multinational companies, the other is consumer or retail business. So based on the PMR direction and the input from the commercial team, this is what my demand review or demand plan looks like. This is my demand view that it looks like. And what it does is it brings you the volume, the sales volumes or the contract value that you have, and the estimated profitability that you're going to make from those contracts and the projections. So it gives you a gross margin view, a top line view of the organization. So once the demand plan is in place and the commercial lead has approved that plan in the commercial in the demand review meeting, after discussion, debates, or whatever modifications it may require. What once the commercial lead has signed off on that, it can be your commercial director also, it flows into the operations team. So there you have your supply chain team, your master supply planner, you have your production lead. So production lead or operation leads owns this process. So now he knows that demand is, we have so much of a demand. Do I have the capacity and capability to service this demand? Yes or no? And what are the best case scenarios? What are the best combinations that I can service this demand? So, I mean, there can be scenarios like, okay, uh, I have uh, I have so much extra capacity to run. So I will give some feedback to demand review that, okay, demand, you have given me so much demand, but I still have some capacity. I can produce some extra stock for you. So that would be one view. Second would be, okay, you're projecting that your customer wants in the next 3 months this product he wants. Is it possible that we can change the priority of the customer and the service timings? Then I will have an optimum production run and I can manage my inventories. So there can be these scenarios. The supply review will work out these scenarios. They will plan out the capacities, and it will give you a view that are you oversold, are you undersold, how much capacity available to sell, and what are your projected stock levels. So supply review gives you this view, and it helps you make an assessment about the cost element. I mean, it's kind of a favorite topic for the finance guys also, that to based on the current supply review, what are the costs I'm incurring? Do I need to hire more manpower? Do I need to pay maybe more gas bill or power bill in the next few months? Or, I mean, the same trend will continue. So it gives a very good visibility. And that's where the first three steps, once you have completed, it flows into the finance, which is integrated reconciliation. You know, every action in the organization, and more or less every action in our lives also, it has a financial implication. It can be good, it can be bad. I mean, you may like it or you may not like it, but essentially it gives you a view that what does the PNL look like for the next 24 months, or if you're projecting next 36 months, what does it the PNL look like for the 36 months? And more importantly, what were the projections, strategy projections that I had? What were the strategy projections that I had, and how my view is changing? What does my P&L look like going forward? So it gives a very good sense to the team that how the business is doing based on the current demand plan, supply plan, and the direction from the PMR side. And there are certain outputs that are uh, there are certain outputs that are given into the MBR. So MBR is a process which is led by the CEO and which is led by the MD. So so it is a process which is led on by the CEO and the MD, and this is where most of the strategy discussions happen, and this is where they have a view. This is where the whole all the process business I mean, from all the four steps, it flows into the MBR, the process owned by the CEO and the MD. So there you have a strategic view, strategic outlook, and you can present, you can have more strategy discussions and strategy topics that, okay, what was the strategic direction that was set out there, and what are the other key enablers that the business might need? Do we need some more capex? Do we need to modify our existing capabilities? Do we need to plan around our strategic workforce? So that's where all these discussions happen. So one of the best part is that you have the financial numbers, you have the operations view, you have the marketing direction, and then what is the organization or the corporation strategy, and where the gaps coming, and what are the decisions and discussions required. It might be like, I mean, if you're into export business, what are the markets that we're looking into? What are the export markets we're looking into? What are the new process capabilities we are looking into developing? So that's where that's the last part of that's where the 5 steps complete, and then the whole process starts all over again. So I'll just take a pause here, and if you have any questions, we can I can take your questions.
I have one question, Humayun.
Sure.
Okay. Yeah, my question is, who is leading the whole process? Who is ensuring that, for example, that the marketing review feeding the input to the commercial review or the sales review? Who is ensuring that the sales or demand review is feeding the input for supply review or whatever? So who is ensuring that the whole process is integrated? Is it finance, or finance should attend the whole 5 meetings, or what do you see? Who's leading, and what is the role exactly in finance in the first 3 process?
I think it's a very good observation, very good question. Okay, how it works is that each step has a process facilitator, and mostly the facilitators, they attend all the 5 I mean all the 4 meetings, because the last meeting is the leadership meeting. So in the last meeting, there is one common person, which is a finance guy, who attends that. So to answer your question objectively, usually there is an IBP lead. So IBP lead can be a finance guy also, or it can be a uh, separate IBP lead position also, that who is responsible for the overall process. So I have seen both the cases where we have a separate IBP lead who is responsible to make sure that the whole process runs effectively, and I have seen a case where FP&A lead or finance lead leads the whole process. Essentially, the responsibility rests with the process owner. Like for example, operation leads has to make sure that supplier review meeting and the process is effectively conducted. What is different in this process compared to SNOP is, or other processes that other organizations might be running, um, it is that it integrates all the cross-functional teams or all the moving parts of the organization. So that's where the disconnect gets answered. So to objectively answer, it would be IBP lead, and as a structure, by default, this 5 steps are set up in such a way that there is always a representation in each process. So when we conduct the meetings, for example, I have conducted a meeting, the PMR meeting, our marketing lead has conducted that meeting. So there will be certain output from that meeting, which will flow into one of the streams. Maybe they need some decision which can be taken at the MBR level, or there is some important output going into the demand review. So we always have a meeting output, and we always have a meeting input. So MBR, when the MBR is conducted, some decisions are taken. So those flow out of MBR into maybe a demand review or maybe a portfolio management review. For example, like sometimes it might happen that, okay, MBR has given a direction that now you have to focus on Southeast Asia market. So this will be an output from MBR into the demand review, essentially the message going from MBR to the commercial team, from the MD and the leadership team to the commercial team, that guys, South Asia is our focus market, or maybe X product category, which is a high margin category. We have a strategic focus on that to uh, promote this product. So this is how each step talks to other step. So does it answer your question?
Yeah, thank you very much. Yeah, that's clear answer. Thank you very much, Humayun.
Okay, great, thanks. So if there are no more questions, I'll move on. So I think we are almost at the tail end of the presentation. You can see there are a lot of great benefits that can flow to the organization. I mean, it broadens your horizon for a start. That is one. You have a rolling 24 months business plan. Every month you're talking about the next 24 months. So the last month is history. You might be spending like 5% of your time on that. but rest of the 95% of the time is going into making sure that the team is focusing on the future. Okay, and the future also has a very two kinds of dimensions are there. Let me make this one more point clear a little bit. How we normally do is, how it works is that, okay, you have a 24 months outlook, and then there is a tactical focus. So what is tactical focus? Tactical focus is my next 3 months, current month plus 2 months. So I don't lose sight of my present, and I'm still looking forward in my future. So this is how it is. It comes to, the whole thing comes together, that I'm looking at maybe 5% of my time in the past, I'm living in my present, and I'm looking into future. So I don't lose sight of where I'm headed. So my horizons are broadened. The team is always thinking and talking about future. It's not just once in a year ritual of annual operating plan or annual budget. It's an ongoing thing, and it trust me, I mean, it helps a lot in the brainstorming and teams thinking out of the box. Teams always thinking about future and making optimum utilization of the available resources. It's a very structured approach. It brings teams together. So I think one of the questions that we earlier had from Zishan was about the culture of the organization. So it helps you form the culture in such a way, because as a process, by default, you have to, all the teams have to come together, and it's a very established, set out thing from the beginning, that working in cross-functional teams is at the heart of it. And when teams work together, I mean, they do wonders. So that's another beautiful part about this. How you can enhance the process, because you can have the best process in the world, but it might not be working. So how you enhance the processes? You enhance the process with analytics. So one way is that, okay, simply talking about my projections, my customers, or things like that. But I think the very important role for the facilitator and for the process owner is that how many analytics and business analytics he can bring. And I think this is where we finance guys can relate to very well, that once you have a data, you can paint a very wonderful picture. You know, you can talk about markets, you can talk about products, you can talk about how the growth, margin, product mix, sales mix. There can be number of things. You can draw heat maps, you can have a lot of pie charts, and the objective is to bring clarity and transparency within the teams, and helping to enable and drive knowledge-based discussions, uh, help to drive the meeting agenda, and start the discussions that help to direct the business, and that helps to navigate through the good and bad times, you know. So it's a very important element. And there are you know, the digital solutions that I have seen is SAP has its IBP business solution. There are other service providers also. One of the another analytical tool that we use is Power BI. We use Tableau. I mean, some of the tools are I'm not using myself hands-on, but my teams are using it. So we get very nice views out of that, and we can have like online, offline discussions with the cross-functional teams. Then we have Salesforce.com. I mean, I think in the group I saw one question from the Khalid Noor, that how we manage the product life cycle, and how we drive the demand process. So what we do is Salesforce.com. It's a web-based solution. It helps you drive the track the opportunities that are there, the new contracts your sales team has established in the market. So they update those those opportunities tracking into the Salesforce.com, and then there is once it's into the system, then you can start tracking it. Then like, I mean, how it works is that you have that, okay, what is the uh, progress of this certain opportunity, and the progress can be maybe you can define the rules for that, that 10%, 25%, 50%, or 75%. What is the level of negotiation and the likelihood that you will be able, your commercial team will be able to lock a deal with the customer. So based on that, there is some, you have to define some objective criteria, some subjective criteria, and based on that, percentages are defined. And for example, what happens is if I have a certain opportunity at a business at a 50% level, that I'm pretty much sure now that okay, I'm halfway through, and I think maybe next 2 months I will once my trial is done with the customer will approve the product, and I can start locking in sales orders with that. So at that stage, what happens is I will start moving this opportunity into my 24 months projections, that I'm moving it to my baseline. So it becomes my uh, forecasted or projected sales revenue. So this is how different tools or different digital solutions help to run the process and enhance the process and enable the team. Another thing these digital solutions do is, I mean, going back to that funnel that we saw where we had people, process, and tools, and the culture point that we discussed, what happens is that as the organizations mature and as your processes mature, when you start having enhancing your systems or processes with the digital solutions, and over the period, any successful good organization, what it does is it reduces reliance on the people and make it more system enabled, because then your process is run transparently and more effectively. It's as good as if I have designed an Excel sheet, so nobody understands it better than me. I know where the data is coming, how I've structured the maybe certain pivot or charts or stuff like that, and where do I get all the data from. So when digitally we enhance the processes, it reduces dependence on the people and it enhances the processes and it improves the quality of the process also, and the quality of decision making also. You have more and more of data driven decision making. um, then IBP process, it helps you plan for the future. It helps you, it prepares you for the future. Your horizon expands, so annual operating plan syndrome, you just get out of that. And then another thing that I've experienced is I've seen is that okay, there is a number my commercial team, my demand team has given to me that okay, boss, we are going to sell so much in the next 12 months plus 12 months. And then when it goes to the MBR, the big boss challenges, the MD challenges, the leadership team challenges that, okay, guys, I think we have more potential, we can do more. And there is a top down information or target flow from there. So then the demand, the planners, the marketing strategists, they come together, they run the numbers, they look at the scenarios, they work out the scenarios, and the top down and bottom up, they start talking to each other. And that's where the growth, the opportunities, the risk assessments, because I mean, so far we have mostly talked about opportunities and the projections. There will be risks also. So that's where those things come out, that okay, yes, there is an opportunity. Your top down target is ambitious and it can be achievable, but I need X, Y, and Z enablers. I need you to maybe enhance my plant capabilities, or my lab, you have to expand your invest in your lab or R&D to meet the customer needs, or maybe you need to get certain quality certifications, so I am able to service certain customer or certain market. Like I mean, we all know that multinational companies, they have very strict quality and safety standards. So we can say, okay, yes, we can do this. This top-down target is good enough. We can achieve it, but we need this so and so help. So you need to invest in some capex or some training or maybe some R&D. So that's the thing. And the bottom line is it enables your strategy execution. Like I mean, we have learned from our discussions from Salim, from Mecca Academy, that 1% is your ideation, 9% is your strategy, but 90% is your execution. So IBP process enables you, uh, it helps you a lot in the strategy execution, where all the teams come together and your concerns, your business challenges are addressed, managed, and handled to achieve the broader business objective. So I think we are at the end of it. So I think that's all the slides that I have. So I'm happy to take any questions that you have. Questions, comments.
Hi, Humayun. I have another question.
Sure.
What are the certain dates for each process? As I know that in our company, for example, that process usually starts in day 5 after month end closing, and it takes from day 5 until I guess day 11 or 12 to complete the whole process, starting from the demand review until finishing the business review or the month end performance review. But in your company, what are the exact dates for each process? And also to be more efficient, because there are many common persons in each meeting. For example, commercial directors are common attendees in 2 or 3 meetings, finance as well. So some companies recommended to combine 2 or 3 meetings in one meeting. For example, S&OP meeting and the business review meeting usually combined in one meeting, because sometimes it wouldn't be efficient to have 5 meetings within 1 week. That's why. What do you recommend?
Okay, I think a very practical question, and that's the practical challenge we all face. So first part of the question is about the timing of this thing, timing of meeting. So what we do is the best way forward is, you know, that you have to conduct these 5 meetings, and very important thing is availability of the right people for the meeting. So before start of the next 12 months, like I mean financial year, so a month or 2 months ago, a month before, we roll out and lock down the calendar, block the calendar for all the important participants. So we have offline discussion with all the stakeholders, and then we lock down the calendar. So what happens is we usually to be practical, I mean, we work backwards. We check our MD's calendar, that what is his or her availability, and based on that we plan date backwards. So we usually plan all the sessions with at least 3 to 4 working days gap between each meeting. So that's how we make sure that everybody is available, and we lock down the calendar for 12 months. So that is to answer your first part of the question. Second part of the question, yes, the risk is having too many meetings, but at the same time, combining too many meetings in one meeting, it dilutes the meeting objective. And I mean, I'm sure I can make a safe guess that you won't be able to achieve the objectives of the meeting. You won't have some actionable outputs or a clear direction from the meetings. I mean, you can have a lot of noise in the meetings, but you will lose the focus. And here you have to be very clear about the fact that we are talking about the next 24 and 36 months, and we have to be in a very clear frame of mind that what our direction is going to be. So it is very important not to dilute the objective of the meeting. And once you have blocked the calendars, once you have rolled out the process, and you are clear about the meeting objectives, you know, it's this meeting is 2 hours plus minus each meeting. Some meetings might stretch to, depending on the agenda, 3 hours or 4 hours in exceptional cases, but 2 hours is good enough time for each of these meetings. And pre-read is very important, and meeting preparation is very, very important. So what we do is we set out the agenda. What are the meeting objectives we want to achieve? There are certain expectations that have been set out, and as the acceptance and awareness in the all the stakeholders improves in the organization, people get more clear, and they prepare in advance those things. And you know, one more very important thing is, sometimes what happens is that we undermine the importance of offline engagement of the cross-functional teams. It's very important to distinguish between this thing that people coming together in a meeting room, having a cup of coffee, looking at the slides, one person presenting, having some discussions and all, and then going out of the meeting without achieving any objectives and any alignment. A lot of times, what we call it pre-sell, a lot of offline engagement has to happen. That okay, I'll walk over to my commercial lead, and I'll ask him, okay, I just came out of the demand review meeting, and you know, the projections, can we do some scenarios, or can we what help do you need on the pricing side or marketing side to improve the projections? So a lot of offline engagement happens between the teams, between the planners, especially the facilitators. So when you go into the meetings, you conduct effective meetings where you have some tangible, actionable outputs from the meetings. So I hope I've been able to answer your question.
Thank you very much, Humayun. Actually, your presentation is very clear and also very practical. I do appreciate all of your effort. Thank you very much.
Sure, absolutely, pleasure.
Hi, Humayun, Zachary here. Thanks
Hi.
for the presentation. Just a quick one. Would you give, say, specific example of the activities that are involved in the integrated reconciliation step? Because what I know is, I mean, from a demand perspective and from a supply perspective, it's quite clear in terms of what their role expectation is. But what is the specific, just a few examples of what would be the specific activities of the integrated reconciliation process, just for my understanding.
Sure, sure. Happy to do that. Okay, so how it works is that at a very basic level, it's drawing out a monthly P&L and looking at what is my net profitability month on month for the next 24 months or next 36 months. So at a very basic level, this is the activity, or this is what is presented in the integrated reconciliation. But what happens is that we talked about a couple of scenarios in the demand and in the supply review. That I gave an example that my production guy can say, can give some feedback that can we change the product mix, or can we change the timing of servicing some customers, because based on that, or based on the demand projections, or there is a certain seasonal blip in the projections, I will need to hire more manpower. And you see the financial impact of that in the integrated reconciliation, because in maybe if you're not looking at the P&L, you might be assuming that, oh, my sales are increasing, and there might be a fair chance that you might overlook the cost element. So that is one example, that one thing that comes into the integrated reconciliation, or IR, that whatever scenarios that have been discussed, those scenarios are financially translated, and then some financial discussion happens around that. Okay, what is the impact of certain decisions and scenarios in financial numbers? So that is one. It becomes very important in case of opportunities, in case of risk, in case of new product launches, in case of product life cycle. So in general terms, there can be scenarios that, okay, we marketing might want to phase in or phase out certain product, but IR will tell that what does the P&L look like, because when maybe the marketing is planning a PLC, product life cycle, of a certain product, first 6 months sales would be low, and we'll be doing a lot of marketing activities and spending a lot of money into that. A lot of money will be pumped into that. So what will my P&L look like? What is that scenario like? So that is another example. Another example, like I come from a manufacturing background. So in the vegetable oil industry, what we do is we look at if I run certain product, what are the byproducts I'm going to produce? What are my costs per metric ton going to be? And what will be my projected stock levels? Because every industry is different. So in my industry, what happens is that we have feedstock. When we process it, we get a main product. We get a co-product, which is around close to 40% of my feedstock. But it is a co-product and it's a low value product. I don't make much money on that. And then I have like 5 to 6% byproduct, which is again a very low value product. So I tell my merchandiser and the trading team that based on these sales projections, this will be my projected stock. And based on the commodity prices, what is your outlook looking at this based on this demand scenario and this projected stock levels? What will my profitability look like? So these are the discussions that would happen. What is the value of my opportunities pipeline, new products pipeline that I have, new business development pipeline? What is the estimated value, and what is the estimated timeline of realization, and how will it reflect in my P&L? And in IR, one more important aspect is tax planning. What does it look like in terms of my tax planning? What is the view? I have some carry forward tax losses, or I'll do some capex. I'll have capital allowances. When is the expiry of my tax losses? Or so I can, this view can help me do tax planning also. And every organization has tax challenges. What is the best strategy forward to handle those things? The very good view is that traditionally in organizations, when something hits the business, we start running the financial simulations. But in this case, it is an ongoing process. So you get all those views, all those scenarios, and all those discussions that are happening. And from IR, it flows into the MBR for discussion and decision if the matter is serious enough. So I think that's what we usually cover in the IR. I hope I've been able to answer your question.
Perfectly, Humayun. Thanks. That's really practical. Thank you so much.
Sure. All right. Any more questions? So I think if there are no more questions, then we are at the top of the hour. So I think I
Hi,
will.
Humayun. This is Mustafa. I have just one question.
Sure.
So we understand the importance of integrated business planning, but we what we observed that not all the companies are doing it. Just like in our company, we do have year budgeted cycle, and we do also have 7 years or 10 years budgeted plan. So how do you think that I integrated business cycle it's integrated in a larger scale of 7 or 10 years? Is that possible?
Okay, 7 and 10 years, when you talk about 7 and 10 years is the organizational direction or a kind of a roadmap. So it's a very high level plan. Organizations normally have it when you have a strategy in place, then you will have a view, because strategy is never for 1 or 2 years or 3 years, 24 or 36 months. Strategy is not meant for that. It's the next high level. So when you talk about 7 years or 5 years, you're talking about what is the strategic direction of the organization. And it boils down to a shorter span or shorter horizon, which is like 24 or 36 months, which your team, if you look at this cross-functional team, if you look at this slide in the 5 processes, these are the teams who make things happen. They are essentially involved in driving the business performance. So strategy direction you have for 5 to 7 years, then it's the job of these processes to run the show and deliver you the results. So that's how these two parts connect. And I think if you have your organization has like 7 year view, I think it's a very good start to think about this kind of a process. So does it help? Does it answer your question?
Yeah, I understand. Thank you.
Sure. All right. So if there are no more questions, then I think we are at the top of the hour, and I think I would like to thank all.
Sorry, Humayun, just one more question. Sorry, I'm just
Sure, sure.
looking at it, and you're talking of. Sorry to take you back. You're talking of the IBP lead. So, I mean, from your own example in your organization, is it that there is a lead for this entire process, and then we have the integration of the process facilitators working together, or how? I believe you've answered this before, but I just need to get clear, because is there an IBP lead? Because I know the process owner is actually the MD for it to trickle down and work out quite well. But then, is there in your organization, is there a person specifically that is the IBP lead that is in charge of setting up the meetings and integrating the different teams and working together?
Yes, to answer the question objectively, yes. And generally, if you see, I say FP&A lead. So, the finance guys usually are at a very unique position when we have access to all the company information. And generally, the finance people should have, I would say, and generally they have a very good understanding about the industry and the market and the business itself. So that way, finance is kind of a natural choice for the IBP lead process. And yes, the IBP lead, I believe IBP lead is there. Most of the times it is there as a separate role.
Okay,
Yeah.
thanks, Humayun.
In my case, I am both IBP lead and the FP&A lead in my organization.
That's motivating. Thank you.
All right, then I think that's all the questions that we have at this moment. So, I mean, you're most welcome to drop the questions in the group. And thank you so much for joining, and thank you again, Salim, for providing this platform and giving me this opportunity, and being enabling us to connect and to have this kind of a view around the businesses and the strategy. So, thank you, Salim, and thank you all the participants. Thank you very much.
Thank you, Humayun. Thank you very much.
Thanks, Humayun.
Sure.
Is there any recording, Humayun, you're gonna share with us? Any recording?
I'll check with Salim, but session is being recorded. Yeah.
Thank you very much. Appreciate it. Thank you.
Thank you, Humayun, for the time.
Sure.
I'm going to switch off now, Humayun.
Sure.
I'll send you the recorded link.
That's good. Thank you again, Salim. Thank you very much.
Okay.
Sure. Thank you.
Okay. Thank you.